Good morning, everyone, or good evening if you're listening in from Singapore. I'm Marc von Grundherr, Director of Benham Reeves, and thank you so much for joining us today, or joining me and Doris today while we do our talk. I can see there's quite a lot of people already joined. It's 10 o'clock. I'm just going to wait for a couple more seconds and let a few more people join, and then I'm going to do my talk. We should last today about 45 minutes. Depending on questions, it might run a little over that, but we will try to keep to tight time so that you can all leave and go to your next Zoom meeting in an hour's time. So we will definitely try to be done within an hour, unless the questions run like mad. But as I said, we will finish as quickly as we can, and there'll be a full recording after this, which we will happily email you out tomorrow. And of course, please keep your questions coming throughout the whole talk, and we'll answer as many as we can at the end. And of course, if we don't get a chance to answer them, then I'll try to reply to them, or Doris will try to reply to you tomorrow or the day after, depending how many questions we have. So I'm going to start in about 30 seconds because I can still see quite a few people joining. Thank you so much once again for joining us. So yes, okay, so I think I'll start now. So hello everyone, as I said, I'm Marc von Grundherr for those of you that just have joined. I'm Director of Benham Reeves based in London. And I'm sure I'm not alone in saying that having worked in property for 25 years now, and in London property that is, 2020 is unique. Times like this are tragic, of course, and our hearts go out to those suffering from or helping us through the virus. But sadly, the press revels in these moments. Their headlines often exaggerate the sense of panic, as we've seen in previous scenarios, with promises of on a Sunday that our kids will be back at school within days, followed on a Monday by claims that will be social distancing into 2021. So what I hope I can do right now is to cut through the hyperbole and explain what is actually happening in London at a ground level. And then Queen of London herself, Doyenne of London property, our Singapore Regional Director, Doris Tan, will join to explain the incredible deals, honestly, deals of the century that she's managed to find. Because we may be working largely from home, but the market continues to move. And we're seeing it from the perspective of developers, tenants, landlords, and investors based around the world. And we've spoken to them about what we and they expect to happen in the coming months. This isn't just a lecture though. So please, as I said at the beginning, do send your questions through, and we'll try to answer as many as we can before the end. So about us, everything I've said are all big promises, so I'll just give you a brief piece of context to explain why we are in a strong position to fulfill them. Benham Reeves have been established in London property for over 60 years now. We have 16 branches in London, and internationally we're in Singapore, Hong Kong, KL, Shanghai, India. We have 3 offices in Delhi, Mumbai and Bangalore, and recently in Dubai, covering Kenya and Africa. And as an investors agent, our international offices are on hand to support clients through the cycle of property ownership, with advice on investment and carefully guided support through the process. And 65% of the properties we let are fully managed by us. So very briefly, what do Benham Reeves do? Well, in a word, everything property related. Investment advice. So we explain on what to buy and where to buy. We give advice. We also help with handover and snagging. So you may be 6,000 miles away, but we're here and we'll go and check the apartments being finished the way it should be. Then we have our own sister company, Install Direct, that does furnishings and refurbishment. That means you complete, you don't have to look at the property. We put in a full pack that's going to appeal to tenants. Or we can just do the decorative or a new bathroom or kitchen, whatever you need. Then we deal with the lettings, and that's finding a very good quality, high-paying tenant. And then we deal with the property management and maintenance. So they don't call you like they do in Singapore, where you as landlord or property manager. We deal with all that for you. And then finally, we do tax returns for you. Whether you have tax to pay or not, you have to do a tax return, and we're here to do that for you. And we do it all in-house. Everything we do ourselves in-house with directly employed people. Nothing is subcontracted. So we never have to let a client down, which is particularly important if you have a tenant moving in. So turning to COVID-19, all this means that we are experiencing the impact of COVID-19 from every property-related angle. Clearly, we'll have to deal with it for a little while longer. So it's worth looking at what is happening now in China, the first country to enter lockdown and the first to open up. The numbers are remarkable. Pre-COVID, in December 19, the average daily number of residential sales across 30 major Chinese cities was 5,760. And at the height of the crisis on February the 8th, only 22 sales were achieved. But by the 31st of March, it had jumped back up to a higher figure of 5,976. In fact, in a project in Wuxiang district in Suzhou, they sold 1.2 billion yuan, that's 136 million pounds worth of homes in 1 minute online. And 90% of the available homes sold in an hour. And we're only in London 2 months behind China. So back in London, I'm not going to pretend things are easy. We are experiencing a black swan event of huge magnitude. Unpredictable, unheralded, and frightening. And it followed 3 international issues that all had an impact on international investment and business. The escalation of the Saudi-Russian relations, the US-China trade dispute, and of course Brexit, if you remember that. So things were getting interesting before February. But as COVID hit, the London property market froze. Developers were forced to cancel all overseas exhibitions. Demand for rental properties fell by 55% in March, and there was a 70% drop in demand to purchase. But what may surprise you is the inverse of those numbers. So 45% of rental inquiries held up, as did 30% of buyers, which is because some people, including key workers, still need to move. Others are planning for when they can move. And a third group just know that an opportunity like this won't come around again. Every day now, we're registering new tenants and buyers. Even in lockdown, we're still letting properties every single day via virtual viewings. And in fact, Zoopla has just reported an increase in rental inquiries of 30% in the first half of April. And for those looking to invest, this is a unique time. It wasn't so long ago that London property became first and foremost a source of solid yield, but right now, investors can expect capital gain once again. And why is this? Well, there are a diverse and compelling set of reasons, driven crucially by the knowledge that, although this crisis has huge ramifications, it was not caused by any fundamental financial weaknesses. Secondly, thanks to the experiences of the past, the UK government acted very fast, intervening at a scale never seen before. These are absolutely tough times, but these measures will ensure we come out hopefully unscathed. Borrowing was already cheap, but it's even cheaper now because of COVID-19. Bank of England base rates have never been lower, 0.1%. And unlike the financial crisis of 2008, banks today are fully capitalized and they want to lend. And with global markets in turmoil and money in the bank actually losing its value when inflation's taken into account, property yields of 4 to 5% look increasingly enticing. Sterling, which had never fully recovered from the Brexit turmoil, has taken another hit. This means that overseas investors can benefit from a sterling discount of up to 30%, effectively enabling buyers to buy at the 2014 exchange rate. From April 21, overseas buyers will have to pay an additional 2% stamp duty. This was already creating pent-up demand, with many planning to beat the deadline, and they're still waiting to pounce. Meanwhile, developers are offering decent discounts now. Many have completed units which they need to sell in a buyer's market. So there are good deals to be had. And as I said, Doris will mention those later on. But let's not lose sight of what really matters. Whatever the context, people still need a roof over their heads and somewhere to live. And London's population continues to grow. Demand continues to exceed supply. And London has proved time after time that it is an extremely resilient city, be it in the face of recession, terrorism, or illness. Property has always been a great safe haven during a crisis, and nowhere more so than London. First, there's the business. There's been significant post-Brexit investment by international giants like Bloomberg, McKinsey, Wells Fargo, Citigroup, and Norway's sovereign wealth fund, which is the world's largest, have made significant investments recently. Second, there's finance. London has the highest concentration of financial and professional service firms in the world. Then there's technology. London has a very strong tech sector with Google, Facebook, Amazon, Apple, and Snapchat announcing new headquarters in London. UK tech investment reached record £10.1 billion last year. Amazingly today, more people work in fintech in London than Silicon Valley or New York. Then there's education. Well, London is the leading education hub. It's consistently ranked as the world's top student city. Incredibly, 450,000 overseas students study in the UK, contributing over £20 billion to the UK economy every year. Interestingly, UK education must be doing something right, as 58 of the world's leaders were educated in the UK. Then there's the rental market. 1/3 of London households live in private rented accommodation. That's the biggest single shift in property that I've seen in my 25 years. And it's going to increase further, with PwC forecasting that by 2025, 60% of Londoners will be renting a property by 2025. They're effectively your tenants for life. And finally is the economy. The UK is the world's 6th largest economy. London's economic growth is double the rest of the UK, and things are going to get a whole lot better with the completion of the incredible infrastructure project Crossrail called the Elizabeth Line. So that's the context. And as ever, the world is currently split into two groups, the optimists and the pessimists. Pessimists point to the IMF forecast of a 3% contraction in the economy this year. Optimists, on the other hand, they look at next year's forecast of 5.8% growth. And to quote the IMF itself, there's no reason why the economic effects of a health crisis should linger, in the way that long periods of slow growth generally follow financial crises. So at Benham Reeves, we are cautiously optimistic. This is a crisis with financial implications, but it's not driven by finance, which means banks are fully capitalized and keen to lend flexibly. There's no semblance of a pre-crash bubble, as house price growth has been low for many months beforehand. Interest rates are almost zero, and the UK government has acted fast with its unprecedented interventions of £330 billion of guaranteed government loans, a furlough scheme for employers, and no rates for businesses, for many businesses. Experts predict that these measures could save 800,000 jobs when the country emerges from the crisis. So what should you do next? Most importantly of all, and this really is crucial to create some context at a time like this, never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back stronger. That includes the Spanish flu of 1918, the Great Depression of the 1930s, the stock market crash of 1987, 9/11, the credit crunch, or even Brexit. So if you're looking to sell, then the process might be a bit drawn out. So I'd advise adopting a wait and watch approach. If you don't need to sell, then my honest advice would be to hold and wait till confidence has returned. This is a buyer's market. And when that changes, remember that a well-dressed house sells for disproportionately more. And our sister company, InStyle Direct, the renowned interior designers, can do this brilliantly for you. For lettings, there are short-term challenges for landlords, with tenants who've either lost their jobs or are on the government furlough scheme. Even some who even left the UK to wait out the lockdown at home and are now asking for rent reductions. This will cause some short-term downward pressure on rents, but this will be short-lived, as shown by during the global financial crisis, where the London rental market recovered very quickly. Landlords simply need to be flexible and empathise with tenants. Some landlords will naturally be worried, but our experience suggests that most tenants are not having issues. Again, ignore the paper talk and deal with reality, which is not all doom and gloom. I re-emphasise that we're still working, we're valuing, listing, leasing and selling properties. And on the buying hand, the market remains on temporary pause. So now is the time to do your homework and get your tactics in place. Look at what to buy, where to buy it, and what to expect. Look at who will rent, what they'll need, from bus links to schools to parking, from professionals to students, families to singles, consultants to mid-management. Different properties become relevant. But when you've made those decisions and done your sums, I firmly believe this is a time of opportunity and indeed a great time to invest. Low interest rates, discounts, strong rental demand, getting ahead of those waiting to buy. And finally, for overseas buyers, especially those in Singapore, the cheap pound. Looking at previous crises like 1998 and 2008, the London market always bounces back with strong growth. As Warren Buffett puts it so perfectly, widespread fear is your friend as an investor because it serves up bargain purchasers. Whether we're talking about socks or stocks, I like buying quality merchandise when it's marked down, and so do I. And there's never been a time in history that the London property market didn't bounce back from being marked down. So a lot of questions I'm being asked is about lending, and the question is are banks still lending? And I thought I'd just touch on this briefly, as it's a key part of investing into London property. And the short answer is yes. Contrary to some media reports, the market is not closed. Most lenders are lending, albeit things are taking a little longer, with rates anywhere from 3% and loan-to-value ratios up to 70%. But it's more important now than ever before to use the right mortgage broker to ensure you get the very best deal available. So turning to our forecasts for property in the UK, and for sales, UK house prices increased in 2019 by 2.2%. In London, they rose in March by 2.4%, their highest rate since before the Brexit vote. Rightmove saw asking prices increase by 5.1% and a 34% increase in agreed sales. So the revised forecast for 2020 is now a 3% fall in the UK, but with prices in central London remaining flat. And over the next 5 years, average predictions are between 13 and 18% growth in London sales prices. In fact, Savills are predicting only 12.4% in prime central London, suggesting that investors should be looking to outer zones 2 to 5 for the best growth. Even the media have not been predicting dropping property prices as they've done in the past. And on the lettings front, forecasts are for a 15% growth in London rents over the next 5 years, as predictions are that 60% of Londoners will be renting by 2025. So in conclusion, the best opportunities exist during a crisis. If you ask anyone in Asia, when was the best time to buy? They always all say during SARS. And while COVID-19 is different, it's a crisis. And history teaches us that crises are horrible and scary, but they always pass. And they're always followed by an upturn in London property prices, particularly when interest rates are so low. So prepare carefully, decide exactly what you want and when you want it. Don't look back and say, I missed that chance. The key is to take the right chance. So here's Doris Tan, our regional director, to explain what fantastic opportunities she's unearthed. Please do keep those questions coming in, because I can see lots of people asking questions. And now I'm going to pass over to Doris. Thank you.
Hi, everybody. I'm Doris from Singapore. A very good afternoon or good morning, depends on where you are zooming from. And thank you for registering with us on this webinar. Before I begin with why buy during crisis and how it creates opportunities, I would like to give you a little background of myself. I started my property career in 1995 when I was the head of the property arm of Hugh Samuel Bank, a leading British bank based in Singapore. Prior to that, I was a banker at the same bank, providing mortgages to 7 countries in the world, including, of course, London, New York, Australia, New Zealand, Canada, and so forth. During the Asian financial crisis in 1998, I left the bank to set up my own property agency business until 2011, when JLL, or Jones Lang LaSalle, acquired my business. Because of my expertise and long-standing relationship with many developers in London, I'm able to assist many investors to buy, sell, and more important, to negotiate the very best property prices for them, which of course resulted in good financial gains. Currently, I'm with Benham Reeves, who provides the best platform for London properties transactions. We offer a full range of services, like what Marc has introduced just now, ranging from buying, financing, lettings and management, tax filing, right down to resales and even furnishing. During my 25 years of dealing with London properties, I've witnessed at least 5 crises. First, it was the Asian financial crisis in 1997, when Asia was badly hit and investors had to sell their overseas properties to cover their losses back home. This has taught me the lesson of diversification in your investment portfolio. Many clients today still remember how I had helped them right over the crisis. Then came SARS in 2003, when again Asia had another round of crisis, this time relating to health issue. During that period, everything was at a standstill for at least 6 months, and people were generally not investing. But it was during SARS that I personally purchased 2 properties which gave me the best returns, 150% return on the value of the properties which would equate to more than 200% return on my initial investment based on my purchase price and the borrowing I borrow from the bank. So it's leveraging, and with that, I can increase the earnings to more than 200%. Then in 2008, we witnessed the global financial crisis. And during this period, many developers in London experienced financial problems, which led them to having to be saved by central banks. It was during this period that we had the best London property purchases, as prices in central London depreciated by more than 20%, and those outside central London fell by more than 30 to 40%. Many of my clients bought during this period, and some of them are still holding the properties as they have achieved very attractive returns on investment and return on rental use for the past 10 to 12 years. Now, after that, we have Brexit. Since Brexit, prices in central London fell close to 15%. But again, because of the uncertainty, many investors avoided buying, but those who bought had done well as Brexit was finalized at the beginning of 2020. Thereafter, we saw many investors coming back on the market to purchase, an increase of 11% of sales volume since 2016. Unfortunately, the good news was dampened by the arrival of COVID-19 at the end of February. This is another health issue crisis, much like SARS, perhaps worse, as this is a worldwide pandemic. Based on my experience and expertise, crisis creates opportunities. And that is the reason why we should consider seriously and take advantage of the investment climate. Buying well and buying in good developments and locations will benefit you in good times or bad times. However, I like to stress that in times of crisis, always buy the best to take advantage of the situation. To give you an example, during COVID-19, I had 3 completions taking place during COVID-19 at the end of February. And 3 of my investors remotely completed the properties in the comfort of their homes in Singapore. And within 1 week, we found them tenants at market price without any compromise on the renters. Now, just to give you an example on the slides that you've seen here, the purchases during the economic crisis, you can see the first one shows in 1997, during the Asian financial crisis, a 1-bed at Kensington Green was purchased for approximately 280,000, and the current value now is 1.2 million. The capital appreciation percentage is 328%. The rent achieved was 650 per week, so the rental yield is about 12.11%. That was in 1997. Then in 2008, during the financial crisis, the 1-bed at 1 Oxford Street, which was purchased at £350,000, today's current value is £700,000. The capital appreciation is 100%. The rent achieved is £550 per week, and the rental yield is about 8.2%. The other example is Baltimore Wharf, which we have, the value of it is purchased at £500,000, and the current value is about $750, and capital appreciation is about 50%, and the rent achieved is £600 per week, and the rental yield shows 6.26%. Therefore, you can see all these purchases during the economic crisis have done very, very well. And this is why this is the time why people should consider, and why are investors still buying at this current moment. And there are the reasons There are 4 reasons that I'd like to highlight. First, because we are buying from reputable developers and are good projects that will generate good rental incomes, both capital appreciation and rental yield. Because these developments are with facilities and amenities, so this will be very attractive for renters. And with good layouts and space, which is very suitable for people who wanted more space now from working from home during the COVID-19 crisis. So people will want to upgrade and move to bigger space. And more importantly, because prices are more negotiable now. So I believe post-COVID-19, people will think harder and will spend more money in buying well and buying good units for their own use or enjoyment, as working from home may become more of a norm. Prices of offices and retail spaces may suffer in terms of take-up rates, whereas residential properties may see a spike of people wanting to upgrade to bigger units and more space for their home office. Therefore, during this period, we should consider some of the very, very best projects in London by the best developers at good discounted prices. So we're going to show you the following are the few that we have identified and selected for your consideration and can get you the best deal of the century. Now, my favorite is the first one, White City Living. This is located in Zone 2, close to Westfield Shopping Mall, next to the new Imperial College, with 2 underground stations surrounding it, set in 8 acres of landscape gardens, including a new 5-acre park. And there are private facilities such as 24 hours concierge, swimming pool, gym, residence lounge, and entertainment suite. Now, as I mentioned, this will become very important as people will need more space for their work, and you can enjoy all these facilities if they are working from home. So all these are set in this kind of setting with good facilities. So the next slide is to show you where exactly White City Living is located. It is in Zone 2, close to central London. You're next door to Notting Hill Gate and Holland Park. And of course, with the Westfield Shopping Mall, everything is at your doorstep. So this is a very, very good development to consider. And rentability is fantastic, as I have just rented out 3 units there, and it was completed during COVID-19. And we got the best rental rates without any compromise on the rentals. So it was really surprising, but we've done very well. And the next project, and the next slide will show you a 1-bed in this development. This 1-bed faces the water gardens. The aspect of it is beautiful with the garden features, and it's a good 1-bed size of 551 square feet, 54 square feet balcony, and completion will be in Q1, Q2, 2023. This is a buying forward contract that you can consider during COVID-19 and will be good when everything is over. You'll see the price increase. And of course, we will get you the best discount, as today is the time, as what Marc said, today is a buyer's market. Now, the second development we want to promote is in Zone 1, West End Gate. This is one of the best location in Zone 1 now at this kind of price. It's in Paddington near Marylebone and is located just minutes walk from Edgware Road Station with excellent transport connection via Bakerloo District Line and Circle Lines. Residents also enjoy all the 24-hour concierge, gym, pool, and spa. This location is so close to Hyde Park that you can see the appreciation will come after COVID-19. And the price for a 2-bed is about 1.38 million before discount on the 10th floor. The next slide will show you the unit, the location. So West End Gate is situated in central London, close to Paddington, close to central London, Bond Street and Oxford Street. Very, very convenient. So the unit that we have for you is a 2-bed on the 10th floor, 798 square feet. Now this is completing next year, Q1, Q2, 2021. So it will be very, very attractive for those who want to consider buying now. And of course, we'll be able to get you a very, very good discount. Like I said, maybe deal of the century. So this is worth considering. And rentability is very, very easy. Yeah, so being in central London, being close to the station, and where Paddington is close by, Crossrail is there. So everything is at the doorstep. So this will be another good option for you. And those who are looking for Zone 1, I would like you to consider this, because I saw some questions on the Facebook or webinar that they like Zone 1. So this is a Zone 1 property. So the third property is in Zone 2 and 3. So basically I have highlighted 1, 2, 3 different types of location for you. But they're all by the same developer, Berkeley Homes, which I will talk a bit later on. Chiswick Gate is in Zone 2 or 3. Now, Chiswick Gate is very, very well located in a residential area and very popular with the local people in London. This is a gated development and is lovely, lovely, beautifully landscaped, and we have a bulk deal of 8 units available. This is the last 8 units where you can buy at a very attractive price. And if you have family or friends who can gather together to buy up these 8 units, we can offer you a very, very fantastic discount. So this is a very good development to consider, because Chiswick, the local people really like it. So for resale, it will be quite easy. For rental, there's no problem. And it's close to central London, and it's close to Heathrow Airport, where it's so centrally located. And like I said, the local people like Chiswick very well. So this is another good option for you. The 1-bed starts at £600,000, and the 2-bed is 799, and the 3-bed is 1.2 million. And all the floor plans we have on the slides, you can see how beautiful they are with the big terraces, and they are big in size as well. A 1-bed is 622 square feet, a 2-bed is 857, and a 3-bed is 1206. So like I said, after COVID-19, people would like to consider bigger space, bigger units. So these are good options. And if you have somebody who can take up all the 8 units, I'm sure you will do very well, because we're getting you a fantastic discount. So the above are some of the properties we have on offer by Berkeley Homes, and they are the top 100 FTSE companies. So you will not go wrong buying from the best, especially during crisis. Berkeley has a reputation for well-designed products, good specifications, and fantastic customer service. A short research into the company will reveal that they are exceptionally well managed and will continue to deliver the best range of residential real estate across London. So, like I said, these are the 3 examples we have, but we have many others all across London that we can offer you the best buying opportunities during COVID-19. So please speak to us personally so I can quickly identify your needs and requirements to find you the best deal across London. So some of the deals we can achieve double-digit discount, and of course you need to tell me where you like, what you like, and what is the purpose of your purchase, and I will tailor make the product to suit your requirements. So thank you very much for listening, and I would appreciate if anyone would like to invest, to quickly speak to us and sign up with us, or any questions you have, we'll be happy to answer your questions. So meanwhile, stay safe. Thank you very much.
Thank you, Doris. Thank you so much for everybody listening and for staying with us so long. I've got quite a few questions come through. The first ones, there've been quite a few asking discounts. So someone asked what the average price. Doris can ask this. Someone's asked, what's the best discount on a West End Gate 2-bedroom? The best thing is to speak to Doris afterwards, and Doris will tell you. So Doris, I'll list the 4 that people have asked about that are most. They're asking for the price of a 2-bed White City.
Sorry, so they want the best discount for West End.
What's the price at White City? That's the first one.
What is the price for White City? 1 bed or 2 bed?
2 bedrooms.
2-bedroom, we can get you about 1 million.
Okay. And what's the discount? Miss T.S. Hua asked, what's the discount on a 2-bed at West End Gate?
We can maybe give you a double-digit discount with
Okay.
my relationship with them.
With your magic. and then Gilbert Tan asked, are there good discounts at Oval?
Oh yes, of course. I can get you special discount in Oval.
Okay, so the last question related to this is SK Quekers asked, Battersea, should I sell now or should I keep it? What's the advice on Battersea?
I think you should keep because Battersea is very interesting. I think during summer or this summer, the Battersea Power Station retail will be opening. So there will be lots of amenities around there, and all the shops and restaurants are open, and I was told that it's so popular now. So I think the best time to sell is not now. You can sell after COVID, but best time is to rent it out and get you a good renter, and then hold it for 1-2 years when Battersea Power Station has fully developed and with the new train line coming on. So my recommendation is definitely to keep it for rental for 1 or 2 years.
I totally agree. I totally agree on that. I mean, I had another question from Glyn Yong. They asked, how is the property price moment with current COVID-19 situation in the UK? Well, as I kind of talked in my talk, is simply everything is on hold. The London property market's on hold at the moment. We haven't seen a big drop in prices. And once the lockdown ends, things will get back to normal really quickly because of everything our government have done in the UK. People still need to move, and there's going to be pent-up demand. You know, the China figures are indicating we're 2 months before. That returned very quickly. Yes, someone mentioned that we've had more deaths than China and more cases. 100% we have. But the fact of the matter is, we're over the peak now, and because of that, things return to normal quickly. Remember, China didn't have the economic support the UK government have made. And our predictions are that we're going to still see good growth from next year. So my view is, and our advice is the property market is on hold. This is a buyer's market because, as Doris has demonstrated, you can get deals from developers. And this is what we're relying on. And as Doris said, double-digit discounts in some cases. The best thing I can recommend you do is we will come back on everybody that's asked about prices, and Doris will do you a personal, in-depth help. And she is the queen of discounts. So if anybody's going to get the discount,
best negotiator.
Almost as good as me. She is the best. Here's a question for you, Doris. So Peter Davis asks, is it better to buy new or second hand?
Well, Definitely new for Asians, because Asians like new properties and less maintenance for new properties, and we are miles away and we're buying for investment. So new is preferred by us. But the local people in London may like to have second-hand ones because of the design, the structure, or the Victorian style building and whatnot. So it depends on what you like. So I wouldn't say it's not good, but what you like and what you want to have, and whether you want to get your hands dirty. But buying new with all the amenities and facilities is the way to buy now. Like I said, you will enjoy your home more, especially working from home nowadays, right? Going forward, we can see the change of lifestyle and change of work.
100%. I think in terms of tenancies as well, we definitely have seen as a shift. We let about 3,500 properties a year, and we have seen a shift over the last 20, 30 years where people used to ask for a little cottage in Hampstead or in Kensington, a little house or a flat in a building which is third floor walk up. Today, tenants tend to want brand new. They love facilities like pools and gyms and all of that. They like convenience of concierge. And new build has less ongoing costs. You pay a small premium, but you don't have the same maintenance costs that will come. So another question, I'm going to take this. There have been a few questions around tenants, and that's from both existing and I'm sure not existing clients who maybe could be clients. So Chuan Yong Tan asked, is it difficult to find tenants at this time? So as Doris talked in her speech, in her quick talk, is absolutely not. You know, it isn't as busy as it were, but we are doing lettings every single day. So if you don't have a tenant, get in touch. Our staff are doing virtual viewings, and they are still going out and doing some viewings where they let the tenants in. We are respecting government 2-meter distancing and all of the health advice that we've had, but we are still going to properties, turning on the lights, opening the doors, wiping everything down, and standing back and let the tenants have a look around. We are still doing that, and we are following restrictions to do letting. So I
really want to add on to during COVID-19, when I had the 3 completions, it was really a bit worrying for me, because how to deliver that. And within days we found 3 tenants for 3 properties.
We are not as busy as normal, but we are still doing full lets in the normal way. We have had people move in every single day during this crisis. Even the week after lockdown, we had people moving in every day. So that was the first. The second question I've had is related to tenants. Is YL asked, my London tenant is asking for a rent reduction. How common is this, and how much reduction to agree to? You have to work on how you feel and what you're able to ask. The first thing we do is get tenants to sign a hardship form. So there are, I'm sure, a lot of people out there saying, I want a rent reduction, just because they hear a crisis and take advantage. We absolutely do not do that. And we check that they want to have a reduction. We want to see that they've been furloughed or that they've lost their job. If they have, we present it to the landlord and we deal with it on a case-by-case basis. Fortunately, most of our tenants are corporates and are large companies, and they don't have problems. And students equally, if they've gone back to their home country, their parents have paid. A lot of the rent is in advance. But if you do have a tenant asking for a reduction, we check it's valid, and then you would negotiate. You don't have to give them rent free. You can defer the rent to later. But if you're asking percentages, we're seeing anywhere from 15 to 30% drops in reductions in rent. It depends what the landlord's doing. How empathetic. We've on the reverse of that, we've had a massive jump in tenants that have had to stay on in properties because they can't move out. The last question I've got that relates to tenants is, can we evict tenants on expiry date? Can they continue to stay and say they have no job, so no money to pay? Well, there was some legislation that came in. The government brought in a law saying you have to now give tenants 3 months, and our courts are closed. So even if you've got an eviction date, you can't do anything about it. So as I said, the key thing is to get on with your tenant and agree a fair plan, because you don't want them sitting there not paying rent. And we haven't had any so far. But the reality is there are challenges right now, as I've talked about, but this will be short term. And so the point that I'm making with that is this is a short term thing. So agree something now so that you can move back. In terms of evicting tenants, it's 3 months. The courts will be back open, but they will have a backlog, but you will still not be in a position where you can't get your tenant out. Nothing will change in the system. We're hoping that they will put extra resource, but we're not sure, into the courts of evicting people. So anyway, that's relating to tenants. I'm happy to ask anything. So anybody's got a question after this, please feel free to email it through, and we'll answer as many as we can on a case-by-case basis. So a couple of other good questions for Doris. So Chikar asked, should I sell now to cut losses or wait it out whilst I continue to earn rental income? And the second question is from Meng. What is the resales market for London in the next 12 months? So 1, should I cut? And 2, what's the resales market in the next 12 months?
Of course, now is the worst time to sell, and nobody in their rightful mind would want to sell unless, yeah, you need the money desperately, but you have the rental income, so why not hold on to it, enjoy the rental income until the situation improves. So I would say not the right time to sell, hold it until things improve. Yeah. The second question was?
And the second question is, what are the predictions for the next 12 months on the resales market?
The prediction for London properties was actually very optimistic, as what was shown on your slides, correct? I think if my memory did not fail, is about 15% for the next 5 years. It would record about 3% per annum. So, of course, with this COVID-19, there's a knee-jerk situation here. So we don't know how much it will improve or increase. But before COVID-19, it was about 3% per annum. So we have to see what come May and how fast the economy can improve. But London being London, we have to be patient, like all cities, major cities. Things will come back, and you must have the holding power when you buy property. It's not overnight. So it's good when buying well, you should enjoy the profits later on. So buying well is very important, and crisis creates the buying opportunities.
Perfect. So as I said in my talk, I talked a little bit about finance. Again, there have been quite a few questions come through. Mr. Wong asked, I'm based in Singapore and wondering how easy I can get a loan and a low rate. Absolutely, you can get a loan and you can get a lowish rate. UK lenders are lending to Singaporeans, so are Maybank, OCBC, all of the banks are lending. The holdup is valuations. So personally, I've got a buy-to-let property. I got a letter in the post last week saying my loan's coming to the end of its rate at the end of June. What do I want to do? So I contacted my broker. We did all the paperwork. I had an offer yesterday, and my valuation is being desktop this week. So actually, for me, on a refinancing was no problem at all. So I'm saying that honestly from my perspective. But I am a UK resident, and I was lucky. And my loan was with Santander, who are usually quite slow. So actually, I was very pleased. I might have been lucky, but the reality is things are still happening. Loans are still taking place. Banks want to lend, which I've said. The rates vary that you pay. So a few people have asked, what are the rates I'm talking about? And they haven't been offered it. Again, you need to work with a broker. You need a good mortgage broker, because they're the ones that deal with 100 banks. You need to check which banks are offering. There are so many banks, small banks I've never heard of that does lending. So the rates are anywhere from 3% upwards, and the loan to value 100% is anywhere from 70% upwards. But this is down. You know, you can speak to your bank, see what they offer, but compare where the market is. See what other people are offering. As I said, Maybank are very open to our customers. OCBC, UOB a little bit, and Standard Chartered, There are a variety of banks, and obviously the UK banks as well. But as I said, I cannot recommend enough using a broker. I used a broker for my flat because he's the one who told me this is the quickest, this is the best, and this is the best rate. So that's what I'd recommend. Another question here that I've had is quite good for Doris. So where's the next, Mr. Hua asked, where's the next safe haven? If the UK is a safe haven, who's the next wave after the Russians and the Saudis? Who are next coming to buy in London?
Yeah, London is so interesting and attractive. Every day you have someone new coming to London to buy. This is a very good question because over 25 years, I've seen waves of different kind of all over the world buying London properties. So in the early days, we have the Arabs, the Greek, and then followed by the, what you call the people from Europe, all over Europe,
Greeks.
And the French, yeah. Then we have a wave from, of course, the recent wave is from China. So every day we have somebody buying London. And during our time in 20, I can't remember the year, but Singapore was one of the highest purchases of London property, overtaking Hong Kong. So every day there's somebody. And the latest I heard, I don't know whether I'm right or wrong, but Egyptians are buying.
There are lots of Egyptians. There
Egyptians.
Turkish
It's amazing.
There are a lot of Turkish buying as well.
Amazing. And Kenyans, right?
Sorry.
Yeah.
But London is this mecca if you come. It's so multinational. We love everybody. Everybody can come and live here, work here, study here. Obviously, visas are within the EU is the same as people coming from out of the EU. People can get jobs. It's very multicultural. We know that with the restaurants. We know that it's very like Singapore, and it's very open, and it's open for investment, which I turn to something that the government are bringing in against my personal wishes. But sadly, it's happening. So a couple of people have asked about the additional stamp duty. Amy asked, how much is the additional transaction fee for international buyers? And do I need to come to the UK to purchase? So two excellent questions. So first one is the additional transaction fee. We call it stamp duty land tax. So you'll see that all over SDLT. SDLT payable by overseas people from April 21 will have to pay an additional 2%. Now, if you own a property for 5 years or 10 years, like Doris is saying, it vanishes very quickly. It's just a little bit extra you have to pay. Unfortunately, it wasn't for years, but it is coming in. But the good news is, if you buy something now and it completes before April 21, you don't pay the additional 2%. So this is why we're saying, and I cannot tell you how many of our clients are coming to the table now saying, I want to avoid the 2%. But it's a good time because developers are offering discounts. So if you're interested, speak to Doris or contact me and I'll put you in touch with Doris, because Doris is the one who'll know what can complete before April 21 and what are you going to save on your 2% stamp duty, to save on the 2% stamp duty, and what you're going to get on the discount.
Yeah. I'd like to take one question from this gentleman, which is very interesting. Salil Kumar, he asked, when would these developments be completed, White City and West End Gate? White City, we have a few phases. The first phase is completing now, or like I mentioned, in February, or even first phase was completed during December last year. So White City is ongoing, and the new phase that we mentioned will be completing in 2022-23. But if you are wanting to buy something now to avoid the 2% stamp duty, which he's asking, so you can buy those resales unit at White City, which we have very, very good sales, good numbers, because there's one or two people who wants to sell at a small loss. So these are opportunities that I can find for you. For West End Gate, completion is early 2021. So you may avoid the 2% additional stamp duty. So, and the next question he asked is the payment terms. So for those projects that are not completed, you have more than 12 months of staggered payment. So for White City, the new phase, you have almost 1.5 to 2 years to pay. So you only pay 10% now, followed by another 10% in a year's time, and then completion. So depends on what you like. Like I mentioned, really, it's very important that we speak personally and we address what you like, what you want, and we tailor make to your individual needs. And because of my private banking background, I'm able to do this, structure your loan, structure your mortgage to your needs, really. So we can't answer the question across the board. Not everybody is the same. Yeah.
And if you have to come to the UK, the question I was going to finish, someone asked if you have to, do you have to come to the UK to buy a property? Absolutely not. If you buy through us and Doris will do the ID, then the lawyer, we have a local lawyers there who can do it. The lawyers are still working remotely. You don't ever have to come. In fact, I'd say 50 to 60% of our clients based in Asia, they've never even visited their properties. They come to London, but they don't even visit. This is an investment. If it's an investment that you're looking to buy, why would you come? If you buy shares in Shell Oil or BP, you don't go and look at their offices or go and look at their oil rigs. So if you're buying a property for investment, by all means, you can use it for a child or for your own use. But if it's investment, we're here to take that strain. Doris is here to get you the best price, and we're here in London to look after it for you. Another question that I've got, which I think is quite interesting. Doris, 2 questions. So Dylan Singh asked, inner or outer London is best?
Very good question. But I believe, this is my personal belief, buy well in crisis. So buy the best. So I would say, if you can afford, buy the best, which is Zone 1, like I said, West Endgate or White City. These are good developments in 1, 2, and 3, where you will get good returns on your investment. Buy well is important.
I think buy well is the most important thing. So we're going to wrap up in about 2-3 minutes. So I've got a couple of extra questions just come in. So Kelvin Tay just asked, which type of room is easier to rent? 1 bed, 2 bed, or 3 bedder? Which one give the higher rental yield? Go on, Doris, is your favorite question.
Yes, it's my favorite, but like I said, with COVID-19, things will change, right? I don't know, I cannot predict, but it happens that, I mean, now that we all work from home, I'm enjoying working from home. I think home is so important now, right? We spend so much time here. So space is important. And a 1 bed in London, some 1 beds are 650 square feet. They're very good size. So 1 bed will rent very well, will sell very well. So there's no problem, no issue. But 2 beds, you will attract higher gains because 1 bed, whatever gain is, there is a limit to the gain. So 2 bed will give you a better gain. So, and of course now with space, maybe people will definitely maybe look for 2 beds or even 3 beds because they need 1 room for their study or for their home office. Like I said, I don't know, but going forward, things will definitely change, I think.
Brilliant. Here's a really interesting, this is kind of a government-led question that we've just had. Do you think that the recent, so there was something in the papers recently, this has led to this question, I'm assuming, do you think that the recent aggressive lobbying from New York tenants for the government to pay their rent, with 68% of all households, will scare New York landlords into pivoting their investments to London instead? Well, my view is London has always been a centre for investment, global investment. Money pours into London when there's crises around the world, which Doris talked about. I think that New York is expensive, and I think if the government do push that, it will change landlords, investors, worldwide investors away from New York, and then they will refocus on London. Doris, what do you think?
Well, I was also Madam Trump. For those who know, I dealt with New York properties during the 90s and year 2000, yes, almost close to 10 years. And that was the prime time that people bought New York properties. But after that, it went downhill because the taxes are very, very high in America. So London is still the favorite, and we find London transactions are more transparent and it's quicker. Yeah.
I agree. I agree. I have had another couple of questions on stamp duty, so I am going to answer this. So is the additional stamp duty based on signing of the agreement or completion date? It's on the completion date. So if you buy it now, to avoid the new additional stamp duty, it has to complete by April 21. And that's why I said Doris can advise you. And this is a very good question. So Cheng Cheng asked, what are the chances of the UK government slashing SDLT to boost the property market? I would love to say yes, but I think there is not a chance they will slash SDLT. They hopefully are going to help to buy and continue to support that. And hopefully they may do something at the bottom end, but this will not help investors and will not be for the market as a whole. The only thing you can do now and you can rely on is you buy now and complete before April 21 in order to save on the additional stamp duty. Other than that, I don't think there's going to be any further drop. So a last question for Doris is it a good time to purchase now? Do you think? Or should we wait until after lockdown?
There's Doris? No difference between lockdown or now. There's no difference. We are already in a situation. We are already in crisis time. We already know, right? So therefore, do select carefully, do understand the whole procedure of buying, and buy well, like I said. So whether you want to wait for post-COVID or now, maybe you will miss the opportunity. If it's post-COVID, things may return to normal very soon, and developers will be less willing to discount at great discounts that I can get. So if you are really keen to buy, and like I said, for those who have not bought London property, I think London property is a must-have in your portfolio. For those who have not bought, this is the best time to consider. For those who have bought, they understand, they know, and maybe they have more than enough, you know, because over the years they have acquired many properties in London. We have clients who owns close to 20 units. So for those which is buying for the first time, definitely crisis creates opportunities. So I go back to what our tagline is. So do not hesitate, speak to us, and don't miss the opportunity. It comes and goes. So this is what I want to say really, because I've witnessed 5 crises and they have all done well. They came out of the crisis, and I'm still holding the properties because they're enjoying great growth and great rental income.
Perfect, thank you. I was going to ask your tip, but I think that's Doris's tip. And my tip is similar to what Doris said. Just do your research and grab it now because we're in crisis. So I'm going to wrap up now, and thank you so much for joining today and listening to us. I'm sorry it's ran on just after 11 o'clock here in London and 6 p.m. at home, but Doris and I are around to answer any questions. Email us or call us. The number's on the slide. Please take a screenshot of that, and then you can call Doris to your heart's content. She's available 24/7 and ready to help you. And we're here to help you and support you through this process, whether an existing client or a new client, and to give you good advice. So thank you so much for joining. Thank you.
Thank you.